Good afternoon and welcome to this week's edition of Halftime Talk. I'm honored to be joined all the way from California by Mr. Manish Chawla, the Global Managing Director of Energy and Natural Resources Industries at IBM. Welcome, Manish.
Thanks, Sharon. Thanks for having me. Glad to be here.
Manish, it is, we're deep into the month of April, into the second quarter of 2021, a year in which so much was expected with the recovery from the COVID pandemic. It seems in some ways it's not a recovery, but we're just getting better at coexisting with this great virus. I'm wondering from your perspective, as we emerge out of the darkness of the COVID pandemic with a mountain of debt and all of this stimulus, where will this sort of deficit lead the global economy, do you think?
So my impression is, I think clearly the stimulus is driving a lot of spending, right? Which is needed to get the economy out of the global economy out of the rut. But at the same time, on the flip side, at least in the US, for example, there's conversations about raising taxes. So at some point, the check will have to be cut back to whoever the money was borrowed from to create the stimulus. I think on the flip side, the spending, as long as that continues in terms of infrastructure or consumer spending, I suspect that itself will create also parts of the tax money coming back into the government. So at some point, I'm optimistic that these two different ideas, which is spend, the governments are spending, and on the flip side, as consumers spend as well as taxes are raised, that the two forces balance each other out. It's really just a question of...
You don't think this will be, let's inflate our way out of this huge debt mountain, which of course is not new. This has been accumulating in the United States in particular for decades now. It's obviously accelerated over the last 10 years. But ultimately, you do think this can be solved fiscally without basically inflating the value, the worth of this debt mountain?
I think the odds this time of taxes on different aspects of, let's say, tax the wealthy, right back to the K-shaped recovery, that is inevitable. So I don't think it's going to lead to, my impression is, at least with the Democrat administration in the US, they're not going to do fiscal belt tightening. They're going to shift to taxing the wealthy, which I think is generally accepted as the likely outcome, even among the wealthy.
When you take that thought on a global level, Manish, in terms of, I mean, the US has obviously spent a lot from a government point of view. We've seen the same in Europe and the UK, and even in China, there's been a lot of loosening. And your thoughts on this challenge across the world in terms of, we're seeing a fiscal position, a monetary position supported by central banks, even like a supported market, but also on the oil side, on OPEC making massive cuts to supply. They are also in a very different way propping up their market. There's a lot of markets being propped up by very heavy lifting. Across all of that, where do you see the challenges to try and sort of dial that back?
I think as the pandemic sort of settles down, India aside for the moment today, I think the demand will start to recover. Is really the basic impression. And if you see the fact that there are so many supply chain constraints, right from China through logistics, through the different markets, I think it's a matter of staging the way through, creating the consumer spending. The challenges will occur, I think, as more economies or more countries really work through their vaccination drives. So getting the supply at this stage of vaccinations through the globe, I think, is perhaps the more more important focal point that will create constraints. OPEC shoring up the oil price at the moment is also being offset by the fact that at the same time demand is picking up, right? Which is as the virus recedes in with vaccinations, it's expected, for example, the second half in the US will have opened up. So the vaccination, in some senses, the vaccination drive, in some sense, the focal should be the focal point, in my opinion. And while there's a lot of fiscal stimulus going on in different economies and regions, the big piece that I see that is not being focused on is what is the global vaccination play, especially for the poorer economies, right? So whether it was supplies being sent to India to be able to manufacture vaccines or then be able to export vaccines, et cetera. I think that's, to me, that is the core thing that people are not necessarily paying attention to, is still very closed boundaries within countries.
Can we have a two-speed recovery here? I mean, it does look at the moment like we're going to come out of COVID or start to emerge from COVID at very different speeds. I mean, China and the US look like they're leading ahead, but there's, as you mentioned, India with a big setback, having had a fairly positive start to the year, even the European Union facing some challenges. Do you think we can progress, or does it all have to progress together? How do you see the global economy in its disrupted recovery?
I think it's inevitable there will be these two-speed, as you called it, two-speed recovery. There's no whether we wanted it or not. I think the way the vaccination drives are working, that seems to be or the controls are working, right? There's what's it called, COVID fatigue, right? Lockdown fatigue. So it's without, as a couple of key economies come through, that I think should release the vaccination supply for several other countries, and that should start to lift up. I think it'll be, I would describe it as a volatile recovery, right, through till 22, assuming there are no more dramatic mutations rather of the virus. So I think that sort of is, in some sense, we've got to watch the vaccination drive around the world to be able to see whether we've achieved some level of stability and uniformity in the recovery.
You mentioned about lockdown fatigue, Manish. Are we getting anywhere close to stimulus fatigue? We're seeing now the US having done a few rounds of big stimulus, accumulated a lot of debt, and now we're seeing inflation coming over the horizon. I think everybody's pretty much in agreement that it's coming. How big and how fast is really the question. We're seeing bond yields rising. How do you think the appetite, the fatigue or not for more stimulus, particularly in the US, given that's where they're talking about more?
Yes, so I think the fatigue is definitely starting to emerge, because on the flip side, as we were talking, right, of stimulus comes taxes. There's no other way. You can't keep printing money forever. There's definitely, I'd say, the market has overheated for various commodities. I'll throw real estate for the moment into commodity as well. So I think it's a question of whether,
and that's everywhere too. I mean, Ireland, where I'm from, here in Dubai, Australia. I mean, it seems like property everywhere is really popping.
Yeah. I think my hope, or the general sense I'm also getting, is at the same time, this time, while property prices are rising, credit is not that free as it was in the prior crash, real estate crash. So that hopefully should offset things. Is there stimulus fatigue? I'm positive there is. I'd say the one good news this time is that the stimulus is also being geared towards an eye towards sustainable recovery as well, right? So there is stimulus going into, not generally, there's parts of it going straight into people's pockets, which is needed to get some spending going at the most bottom levels, right, as well as basic food on the table. But there's also stimulus going into a sustainable recovery. So in some sense, there's stimulus fatigue, but there's also having to pay back the debts of our own prior decades, right, where we were not paying attention to those net zero considerations as well.
It'll be a delicate balance for the Biden administration in America and in other places, but the idea of not burdening the sort of middle class, the working class, and while at the same token continuing to have stimulus and tax those, it'll be a political. The honeymoon may end soon once the blank checks are put away. Since the start of the year, and obviously the big threat there is inflation. The signature benchmark for futures of lumber are up 50% this year, as all commodities, soft and hard, are on a tear in the last 6 months. In some ways, oil looks like the lost child, not in its, of course, recovered, but nothing too dramatic.
Right.
Are we at the beginning? Are we already in another commodity super cycle, do you think?
So clearly, I think we're definitely in a growth cycle. Whether it's a super cycle that lasts 10 years is hard to say at the moment. I think in almost all commodities, whether it's infrastructure driven or the green economy driven, right, or others, clearly there's demand pumping up. So I would say yes, definitely all the companies that I've spoken to seem to be thinking that this is at least 2 to 3 years, but they're not also thinking of it as being a 10-year cycle as well. Because I think there is recognition that this time the balance, as you called a delicate balance between fiscal stimulus, taxes, and having to cool down economies at some point will come soon. My impression is CEOs are a bit wiser this time versus other cycles to not also lean into. They're going to lean into it to meet demand, but they're also not going crazy in terms of sort of going after new unproductive or investments that have a break even, that rely on a much higher price point than what they think is sustainable after 2-3 years.
Are you specific, or do you reference there the likes of shale oil producers in the US, which would appear to have been quite restrained so far? US still down 2 million barrels a day. You would think at $65 a barrel or thereabouts that you would see a much more momentum in the US oil production recovery.
So my impression, actually reading up a bit and speaking to a few, is that drilling activity has definitely picked up. Right. So, and that precedes, of course, production. So I think it's just a matter of time, but they're also going to be nobody seems to be going super crazy at the moment is my impression. And what I was also thinking of was iron ore and such like commodities as well, right? So CEOs of big iron ore companies are also predicting that it's a 2-3 year wave, at the same time being fiscally prudent. I don't see the large capital investments also occurring at the same time, right? So it is a measured. CEOs seem to have a measured approach, is my view. They're bullish but measured.
When you consider the point you made there about the commodity super cycle, whether there's a 10-year train to pull this forward, like China did in the last one, in the zeros, if you like, running into the last crash, 909-10, there is a certain view that India could be the locomotive to pull the next commodity super cycle. Of course, this week it doesn't look that way, as India faces such a huge challenge. But only a few weeks ago, the World Bank had India GDP growth at over 10% for the next fiscal year. I'm sure India will come through this moment. What are your own thoughts about India being potentially the engine of another super commodity cycle?
I'm not sure if so. Definitely, India will continue to march through growth. I think the chaotic, highly functioning democracy that India is I don't think sets it
A very
on a
creative
stage.
way of putting that. Thank you. And
It's almost, it's almost fun to look up and see every day what the political news is of the day. But that aside,
yes,
I think India will be a very important part of growth drivers for the globe. But I don't think for the next 10 years, India won't be the difference between growth or sort of a flattish economy. I think the size of China and the size of Europe, those will be, and the US, of course, right? Those will be more principal. India will work its way through to being even more important, but I don't think it's going to be the difference between. It's not going to be the balancing point, right, between
right.
massive growth versus more or slower growth.
Manish, one of the outcomes of the COVID pandemic, and these again are trends that were already in place pre-COVID and perhaps accelerated by COVID, has been the sort of standoff between the US and China. We saw during the Trump administration, of course, spectacularly, that sort of erupting into a trade war. Now we seem to be every day in even more a sort of heightened sense of political standoff between the US/the West and China, and it's becoming even every day. And most recently, the Australians have found themselves having their coal blocked out of China, and all sorts of different things happening, where it appears kind of Cold War-esque, where you nearly have to choose a side, as one did during the Cold War between the Soviet Union and the United States. I wonder your thoughts on the outlook for this China-US standoff as we come out of COVID. Is it going to define the next 10 years, and how do international companies play that?
Yes, my impression is the supply chains are so intertwined still today, right? And China's economic status is so different than, say, for example, during the height of the Cold War between the USSR and the US, right? So this is clearly now, in some sense, not an ideological Cold War, right? It's an economic battle to own the resources of the world that will be required. But I think the supply chains are so intertwined that no country seems to be, few countries are picking sides, but most countries are picking which side of the center point are they on. So are they a bit leaning towards the US or leaning towards China? I'm seeing countries and economies take more of a balanced approach based on what is needed from an economic perspective. So I think this China owning so much debt around the world, right, for various economies, as well as having invested so much, that there will always be this balance point. There is a long-term trend towards trying to disentangle supply chains, but it's anybody's guess as to whether 20 years from now we'll find having reshored manufacturing, etc., will have occurred or not. So by that time, and that's what China seems to be preparing for, is when economies are disentangled as well, and they're trying to build up their consumer economy. But at the end, I think supply chains are so intertwined, and China has so much debt. There'll always be this moving around the balance point that most countries will find, and economic reasons will, I think, continue to countervail ideological reasons.
One of the pieces that's making a lot of headlines recently that is kind of caught up in this, although not sort of on the nose, and that is Taiwan and the shortage of semiconductors in the world today, which is having a big impact and increasingly across multiple sectors, and it's getting the headlines in the auto sector, but affecting increasingly many others. Where do you see that in the context of this equation of the US-China face-off?
Yeah, Taiwan is very principled. You're right to of course the ideological point, but also the semiconductor industry. So I think it's still 5-10 years still reshoring. Companies have declared manufacturing fabs, in the US as well. Intel, for example. Taiwan, I think you're right, is perhaps the flashpoint because it's where so many supply chains seem to originate with these little tiny chips that really matter to today's products of every type. I suspect China, to make a point, it seems to me will move in heavily against Taiwan, unless the US really weighs in very heavily. It's anybody's guess as to whether the US will sort of sacrifice some other ideological points to retain some balance in Taiwan, which perhaps maybe let China come into Taiwan while maintaining supply of chips to the rest of the world. So it's really a question of where the compromises occur while the supply chains are disentangled.
Yeah, that would seem like a potentially raw nerve there of scale.
Yeah,
The other big trend coming out of COVID, again, it was well in bed before, and that is the digital transformation that the pandemic seems to accelerate it. We're all working so efficiently remotely
yeah.
using all of the toolbox available. uh, what do you think the impact of accelerating sustainability and the great energy transition, how it's going to sort of unfold as we come out of COVID with this digital transformation?
So clearly, digital transformation accelerated dramatically, through the pandemic. A few different factors. I think digital is being considered by many industries and many governments as being important to resilience. Right, clearly, to be able to survive any such crisis and continue to operate well. Consumers and customers are expecting a much more seamless digital front end. Businesses recognize they don't provide it, they lose out. On the connection to sustainability, I think is very important as well. With that, what you can measure is what you can improve. That clearly seems to be at the end, digital allows you that ability to, if you put sensors everywhere, for example, natural gas or oil wells for that matter, you can clearly cap off emissions or be able to determine when a leak is occurring, right? Just as a simple example.
Well,
So the
methane
intersection of
leakage
digital,
being such a critical piece now in the transition.
absolutely, and for that matter, balancing the grid, right, with so much
Right.
electric consumption coming in, that's a matter of digital capability as well. So I think if you see that end-to-end parameter or spectrum, digital is clearly required from a resilience perspective, whether at a company level or at a country level, and similarly sustainability. And there's a strong intersection between the two. I think that is coming through. That actually should encourage us all. Other than the fact that the workforce needs to be transitioned into those digital careers as well. That I think is where a big focus is starting to emerge, because that what we also don't want is a digital success population and those that are left behind, because that lead to significant instability. So there's this balance point, but I think the march is on, and I think it's only accelerating.
Well, the critical point there, ultimately, digital literacy. I mean, in some ways, it's this acceleration has come much faster than ever anybody had planned, and
Yeah.
so is the even this the the IT department or the digital experts in any company, obviously up to speed to a point, but even there they struggle to deploy fourth industrial revolution tools, artificial intelligence, and all of the others. And I'm talking in specific about the energy and natural resources in particular now. That digital literacy across the sector needs to be elevated in order to manage this transition.
For sure, for sure. I think we've got to focus on how people do work, what we call intelligent workflows, right? And unless you think of the folks on the oil rig or out in maintaining a gas station, or for that matter, repairing a transmission grid point or whatever, if you don't, or customer service agents, right? If you don't think of how they operate, what information they need, and then work backwards from there versus, working forwards from, hey, I've got this cool toy, I want to deploy it. I think it's got to start with the user in the center, and make it as easy as people are, finding the use of their iPhones or Android phones or whatever. If that occurs, then digital literacy will come naturally because it is around us in our consumer life, right, in our everyday life. And if we bring it with the user in the middle, any employee in the value chain, I think we can see success.
Well, I think, Manish, we will leave it there. I'd like to thank you so much for joining us on Halftime Talk this week. Manish Chawla, Global Managing Director, Energy and Natural Resources Industries at IBM. A pleasure to have you with us.
Same here, Sean. Thank you for having me.